2021, we've seen a tremendous amount of deal-making activity in private equity and M&A, and really driven by a few catalysts. We've seen very accommodating rate environment. We've seen sponsors with tremendous amount of private equity willing to put to work, and we've seen the economic recovery really pull through.
If we look at just the first half of 21 alone, about a quarter of the deals that were $1 billion or greater were private equity acquisitions. We also had almost $500 billion of volume in terms of new LBOs in the first half of the year.
We've seen a lot of capital come into the private equity community, which has led them to pursue more and bigger deals.
The Biden administration put out directives to scrutinize strategic mergers more closely. And so as a result, private equity actually in some ways is carrying the mantle for the momentum in the M&A market.
I think what's happening is a lot of corporates are considering, do I really want to look at those larger deals today, given the increased scrutiny from a regulatory perspective? And what's happening is it's providing an opportunity for the private equity firms who are sitting there and have a significant pool of capital.
I think the post-COVID environment has given private equity more comfort to diversify across different sectors that they weren't looking at beforehand.
The other thing that's interesting is nothing that's being contemplated in tax reform in Congress is necessarily an impediment to private equity.
We're seeing more and more capital deployed in the technology sector than I've ever seen.
Like Thoma Bravo, for example. At the end of 20, they raised almost $23 billion in their latest fund.
And I also think we're seeing a lot of growth in a convergence of sectors. So using healthcare and marrying that to technology and finding ways to contain costs, expand service, be more efficient. Those are the two areas that we see a lot of growth from, especially in the leveraged finance markets.
I think the Apollo Verizon Media transaction with the Yahoo and AOL brands is a perfect example of where we can add value to our clients.
The complexity was that you've got a corporate seller who just wants to be able to sell and be done. And it was $1.5 billion capital raise. We ended up raising about $3.5 billion from them, and the deal was oversubscribed, and we were able to tighten down the terms.
And that type of complexity is the future for private equity, because the cookie cutter easy deals are not really there.
There's a significant number of portfolio companies sitting in private equity funds today that are being valued at levels that are significantly higher than what was anticipated when they purchased them just 2 or 3 years ago. And they're trying to think about the best way to monetize that, both for those companies and also for the different constituents that are involved.
I think we've got a Fed that's going to remain accommodative at least until the middle part of next year. I think we have strong tailwinds in the economy, and I think we've got a lot of capital both on the private equity as well as on the financing side that wants to be deployed. So we're very optimistic about deal-making opportunities going into 2022.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.